Make it 3:50. Good afternoon and welcome to Closing Bell. I'm Anuj, with me, Prashant and Nigel. Could today be a 500-point Nifty day? It's just been that kind of a day. Right from the word go, the market's not looked back. We opened at 17,000, almost 500 or thereabout. And after that, added another 200 points from that point. In fact, more than that, we have added in today's trading session. Now, we discussed in the morning that globally there's a lot of shorts and there could be some short covering, but it looks like this is more domestic in nature because the Nifty is up 2%, the Bank Nifty is up 2.5%. Globally, there's no major move that you're seeing in the global market, except perhaps dollar, which has retreated a bit. So the big question is the start of something big? Today's FI number will be something to watch out for. The way currency has played out in today's trade, despite higher Brent prices, is telling you something there. And of course, one indication was that even on weekdays, the broader market has been strong through this month. That index is up almost 6% now for the month. So there's clearly inherent strength in the market despite the global volatility. Prashant, Nigel, good afternoon. Just stunning day.
Nigel, hi. No, absolutely right. I mean, the bullishness is quite something, right? Yeah. Otherworldly, really.
As I said, the market's only closed for tomorrow, not forever.
That was a joke. But it's just pushing and pushing. I was actually joking with you. Is another round of corporate tax cuts or something coming later? I mean, it's been that kind of a day. But, if you want to look, kind of try and rationalize what's going on, what's on the mind of people, because this is locally led. It's also foreigner-led because there is no foreigner selling. I mean, the number later today will be interesting. Are they very large buyers? But the fact is this. Yesterday, and I made this point in the morning at 8 o'clock as well, yesterday the market was down 200 points, a little more than 200 points, but there was no carnage or anything of that sort. 2:1 in favor of declines to advances ratio. A lot of broader markets just fine. I mean, they were down 1% or so, but no carnage really. And then we got the FII number, which actually was not negative. I mean, you just go back and think of the mood over the weekend, the sentiment. It was absolutely in a downward spiral after Friday's big correction of 3 and 4% on S&P and NASDAQ respectively. So, if there was to be some big global-led selling from FIIs, it should have come yesterday. It was not the case. And I think that maybe perhaps more than anything else at this point is giving courage and confidence that, if you don't get selling on the back of those kind of cues, I mean, if you get like a garden variety 1%, 1.5% pullback, I mean, it should be okay with all that is happening going on here in India. The other data point to watch is tomorrow we get the GST tax collection numbers. This will be, for the month of July. The last one was for the month of June. In June, we had a number of 1.48 lakh crores. July number will be interesting. If this is strong again, I think it'll be taken with both hands in a pretty cheerful way. I mean, it will be higher because, I mean, July also had, I think, a day more than June. So there will be some impact of that. But if it's substantially better, I think, that's going to be a market-sensitive number as well, locally speaking. Beyond that, I mean, it's, of course, over to global cues, etc. Futures are doing just fine. I mean, they're not cracking big time or anything of that sort. Nigel, hi.
Well, I'll tell you one more data point, Prashant, that we're bracing for the best ever monthly close number. We're closer to around 17,700 odd mark. You'll say in October, we went all the way to around 18,600 odd. But I'll tell you, in the month of October 2021 itself, we hit a high of around 18,604. However, on the final day of October, we closed at around 17,672. So a close above 17,672 will be the highest ever monthly close. Today is the final day because tomorrow we have a holiday. So it appears, at least as of now, that record is there for the taking. We're closer to around 17,700 odd mark. And it appears the bulls are in full control from yesterday's lows. Well, you've seen a good recovery of close to around 550 points odd. Let's see what this final 60 minutes hold for us. First up, though, let's run you through what we have lined up on the show for you. The long-awaited demerger of Piramal Enterprises Pharma and Financial Services business is set to take place. The conglomerate, which currently houses both the businesses together, is set to list the two entities separately. More details coming up on the show. And Ashok Leyland extends gains on the back of its latest launch in the LCV segment, the Bada Dost. Details and excerpts of our chat with the management lined up on the show. We'll also discuss the technicals of the market with Jay Bala of CashTheKiosk.com. Not just that, a detailed chat on the markets and the sectors, as well as stocks that will be in focus with our Alpha Manager of the Day, Srinivas Rao of PGIM India Mutual Fund.
Okay, but first up, as always, we start the show with last hour calls. Mitesh Thakkar joins us for that. The Bank Nifty, by the way, is approaching 1100-point rally right now. And just look at some of these names like ICICI Bank, Axis, HDFC Bank itself. Of course, the two Bajaj twins, Bajaj Finance and Finserv. Massive move in financials across the board, actually, but financials do stand out. Mitesh, hi, good afternoon. Yeah, I remember you were positive on the market, but hand on heart, you would not have expected this, right? So, what do you make of this move today, and what would be your calls, of course, in terms of individual names?
Good afternoon, Anuj. No ways I think I was expecting this. We were expecting that this bounce back will possibly head towards 17,600, 620 to begin with, and then we'll take it from there. But this is extremely strong. Not that we don't like it. I mean, obviously, we will welcome it with both hands. But yeah, I think much stronger than expected. And as I said, I think that only confirms that the medium-term trend will eventually be on the upside. The important point would be the bounce back high, which was on the 25th of August. The high of around 17,725. I think once we clear that, then I think there's a good chance that we should try to head towards 17,950, 18,000 levels, which was the recent swing high. So with that, we're trading with clearly more of positive bias. I have a buy on Britannia. I think that's a stock which is breaking out on the upside. Britannia is a buy with a stop at about levels of 37.25 and a target of around 38.30 to begin with. We can actually eventually look at even higher levels over here. And the other one which I like is Bharat Forge, which is a buy with a stop at levels of roughly around 731 for targets of around 770.
Okay, all right. Mitesh, thanks very much. Good speaking with you. And we'll have you back to look at markets, in a bit once again. By the way, I mean, our old friend, that trend line from the all-time highs is not very far. I mean, I think it comes in at about 17,700, 17,694 or so. Yeah, I mean, I think we are almost there. Or no, sorry, that's at 17,775. Yeah, 17,775. So it's still a little away, 75, 80 points away. But with the pace that we are seeing today, I mean, anything is possible. We saw that we saw a push above it, early August, 10th or 12th of August, and then we cracked below it meaningfully on the 17th of August. And we're almost about 70, 80 points away once again as we wrap up this week. Devin Chokshi of KR Chokshi is with us. Devin, good to have you with us here. Thank you very much. I mean, again, it's the same one, the same question, which is what is going on? I mean, it's absolutely as hot as it comes. A very, very strong market.
Yes, Prashant. Good afternoon. Well, I think the market possibly showing a lot of resilience also because of a few facts. On one side, I think we are seeing the dollar-related activity keeping market a little bit nervous. The fear that I think the FIs might sell in case I think the rupee depreciates against the dollar. And that could be one of the reasons for which I think yesterday the sell-off took place. But I would think that I think that sell-off was probably, I think, in hurry, which it took place. On the other side, I think the market is attracting a lot of new investments. And definitely, I think this is the good news. That if you are continuously attracting good new investment into the market, and I think variety of stocks, I think, attract new investors, possibility of, I think, market stabilizing would remain very high in a given kind of a sell-off. So that tells me one thing, that I think in this market, whenever a sell-off takes place, I think there is a new buying, resurgence in the buying taking place. And that is where I think possibly one is looking at the opportunity. Of course, I think the fundamental points, I think, which are very, very strong. Second half of the financial year, we are likely to see the impact of higher credit growth rate resulting into better earnings from the corporate side. Lower amount of, I think, commodity prices because of good agricultural production, I think, which would possibly come out of good rains, and also contained inflation as far as I think the industrial commodity items are concerned. All in all put together, I think would possibly show relatively better performance in the second half of the financial year, so which is attracting funds into the market. So it's a combination of two things. On one side, the potential for higher amount of earnings going forward, and at the same time, inflow of, I think, sustained inflow of, I think, good money, which is chasing, I think, quality stocks into the market. And that's where I think you see the buying taking place doing every sell-off.
Well, today has been broad-based. Even IT is participating. Names like Mindtree, Coforge, all these stocks doing well. The other space which has made a bit of a comeback is chemicals. So SRF is up quite a bit, and Oberoi Real Estate is now your top F&O gainer, 6% higher on that stock. Devin, hi, good afternoon. Thoughts on these real estate names? Big moves today in both DLF and Oberoi.
Yeah, Anuj, good afternoon. I think largely I would think that some of the projects are getting near completions. And as a result of which in the quarterly result performance, I think you will see the reflection of them. Most of these companies are having a higher amount of visibility also because of the fact that the amount of square feet that they have taken up for construction, and I think which is likely to materialize into the sales in coming quarters with the completion of these projects. And that is one of the good part I think that one can argue for, that you are having a good sustained demand taking place in the environment. And as a result of which, particularly in the residential premises, I think you are having a sustained demand taking place. And that's where probably I think some of these companies are showing up. I'm not too sure about, I think they're attracting additional new funds from some long-term investors at this point of time. But I think more of a market condition, which is basically, I think, asking the investors to put money into it. Wherever I think the results are likely to be better on a quarterly basis, that would happen first, as far as I think some of the real estate companies are concerned.
Okay, all right. If real estate is going to do well, then cement consumption is going to go up. So, Devin, I wanted to ask you about a couple of these cement names. India Cements, every, I think, 6 to around 9 months, we hear about various rumors. Maybe a change of promoter, maybe, in fact, the large investor in there, Mr. R.K. Damani, who has close to around 21% stake in the company. So, the financial performance has been anything but good. It's in fact been rather poor, and it's been lagging what the industry does. But how do you approach the stock at around 225 to around 230 rupees? Clearly, the street is hoping for some inorganic growth, some consolidation in the industry. But at 230 rupees, it trades at around $80 per ton. Would you buy it, or would you say that there are better opportunities out there?
So I think, Nigel, good afternoon. The opportunity-wise, if you see cement as a space, I think offers a distinctly high and good opportunity. Regional players, particularly in the South India, I think would possibly see, I think, sustained buying also because of the larger capacity with some of the large players that they have created as. So from that perspective, you definitely feel that, yeah, there is an opportunity out there because of the market condition remaining strong. And post monsoon, when the construction activity starts taking place, also because of the fact that the infrastructure projects are rolling out, also the fact that I think new industries are coming up in different pockets of the country. So obviously, I think you're going to see the larger amount of cement demand continuing. On the other side, the good news is that I think the cost pressure has possibly, if not come down completely, has marginalized to a certain extent. And as a result of which, I think the threat on the profitability of cement companies, which we saw in the last quarter, I think possibly is getting a little bit receding now. So from that point of view, I would think that I think better profitability prospects, along with the higher demand continuing for most of these companies. I think the valuation wise, yes, I think somewhere I think they're expensive, but profit performance has not come up. But as I said, I think it is always high on potential. Performance is possibly expected to follow. And this market wants such kind of stories. Because on one side, you are having the higher amount of construction activity taking place. Other side, I think the building material supplier companies, I think, are finding greater demand in the traction. And that's where I think the market is following some of these stories. Not too sure whether I think one would like to simply immediately jump into it. But yes, I think selectively larger pan-India players like Ultratech and Holcim Group, they remain better placed comparatively compared to many of the smaller regional players.
Okay, by the way, just, today, of course, we've seen so many stocks do well. One that stands out is Tata Tele Maharashtra, TTML, that is. Remember from 290, we had seen all the move all the way down to 90 on that stock. And today it's circuit up 20% higher on that stock, and with the huge volumes. Tata Tele Maharashtra is a stock that we are referring to. So big move happening on that. Devan, just trying my luck here. Do you track this? Have you seen this move over the last many days?
Not really, Anuj. I think we used to have this particular stock under our coverage, but I think for long I think we have dropped that coverage. So not enough about the company.
Okay, that's on TTML has done really well. And just another one that I want to ask you, Devin, is on Federal Bank. That's seeing a bit of a multi-year breakout after last quarter's numbers. I think last quarter numbers the stock was at 87, 88, and since then we've seen this move. Now it normally every time struggles at around 110, 115, but this time it's just taken that off. Any views here, Federal Bank?
So many of these smaller mid-sized banks, I think, are basically attracting larger amount of buying interest. The theory going around is that I think these kind of banks could probably find some kind of strategic alliances, stroke consolidation happening eventually into their businesses. And that could be one of the reasons for which I think in some select pockets, investors putting money into this kind of companies. The larger banks where the AUM growth is systematically happening, where the AUM size is big, likes of HDFC, likes of ICICI, I think their possibility of higher amount of growth as far as the stock price is concerned, I think is not happening. They are relatively, I think, in a range of around 15 to 20% growth in a year. Whereas some of the small mid-sized banks, I think they're attracting a large amount of money at the same time, higher percentage of appreciation in the portfolio. Beyond that, I think the fundamentals and the business condition wise, I believe that the most of the banking companies are today finding favor with corporate. Most of the corporate borrowers are basically demanding higher amount of money, and that's where I think you're seeing the growth. The retail book has already been growing systematically, and in some of the many banks, I think where the housing finance portfolio is also, I think, very systematically growing. But I think in case of Federal Bank, probably I think the size and the amount of money which is chasing into them under the strategic possibilities, I think is the would be the prime driver for driving this particular stock price.
Devin, but on the banking names, the other theory going around is, fundamentally you have another IPO, Tamil Nadu Mercantile Bank IPO that's scheduled for the coming week. I was just looking at the valuations. On a trailing basis, it appears that it's coming at around 1.5 times price to book, but on a forward earnings, on the forward book, it appears it's coming at around 1.1 times odd. Now, quite a few of these banks that are listed already, that's the RBL banks, your Federal Bank that you just mentioned at around 1.2 times odd. So from the broader banks, if someone was thinking of applying in the IPO, do you think there are better options already in the listed space, and you'll get adequate quantity as well if demanded? Go ahead.
So, Nigel, I think, yes, there are a category of investors who would basically apply in IPO and probably, I think, make their gain out of flipping of the IPO investments. But people like, I think, us who are basically investing largely through our PMSs into the portfolios, we feel that I think today the opportunity is best for some of the larger banks, because some of the larger banks with a higher amount of AUM have a higher amount of possibility, and that on a sustainable basis as far as their credit growth is concerned, because I think their corporate customers are probably demanding more credit. So maybe I think down the line, few quarters from now, I think some of these larger banks could possibly show relatively higher performance in their books, and that is where probably I think our focus would remain buying into some of them. So we do agree that I think compared to the smaller and mid-sized banks, I think they may probably give the average return. But at the same time, I think this is a sustainable return that we are expecting for next 3 to 5 years. And that is where I think probably our preference remains with the larger banks like HDFC and even for that matter ICICI, Axis kind of companies.
Okay, larger banks, they have better access as well, and to deposits, their CASA ratio will look better, and in a rising environment, interest rate environment, the cost of borrowing may not go up so much. Got that point, Devin. Just stay with us for the time being. We'll slip into a short break. We'll focus on Ashok Leyland though on the other side. It gains on the back of their latest launch in the LCV segment, the Bada Dost. Details and excerpts of our conversation with the management lined up on the other side. We'll also get a chat going on the markets with our Alpha Manager of the Day, Mr. Srinivas Rao of PGIM Indian Mutual Fund.
Okay, welcome back. I mean, things are looking super solid. 375 points is what you have on the index, 17,690 at this point in time. So no let off, absolutely none whatsoever. Now, Ashok Leyland is in focus now. The stock is up about 3% at the back of a new light commercial vehicle launch. Sonia is here with details on how this could be meaningful for the company. Sonia, over to you.
So, generally we talk about the MHCV sector, right, and how that's picking up, but the light commercial vehicle sector has also been growing at a very fast pace. And Ashok Leyland has a popular product in this range, which is called Bada Dost. They've launched 2 or 3 new variants of the Bada Dost, and on that launch, they mentioned that the LCV segment for them is growing very well. They're currently sitting on 20% market share. They hope to grow that segment to 24 to 25% market share. Overall as well, not just infrastructure activity, but demand is picked up because of e-commerce and logistics industry using a lot of light commercial vehicles. And they say that the industry itself, the LCV industry, is expected to grow 16% in FY23. And on a compounded growth rate, they're looking at a growth of almost 10 to 12% in the LCV industry over the next 3 to 4 years. So very bullish on that space and looking to grow their market share as well. I had a chance to speak to the management about the launch of the Bada Dost and the prospects that they have there. Listen into what they had to say.
TIV growth is beyond our expectation. We expected TIV to grow at about 10 to 12%, but actually post-COVID, I am seeing a huge growth, which is growing at about 16 to 18%. So I am expecting that the year end would be around 16% growth in TIV segment, which is much better than pre-COVID levels. Market share is about 20.3% in LCV 2 to 3.5 ton segment. And of course, the launches will add to it. For LCV, we are targeting about 24 to 25% share, and industry would go at around 16% this year. And CAGR of next 3 to 5 years would be around 10 to 12%.
All right, so that's Ashok Leyland. Sonia, thanks very much for that. Now, Jay Wala of Cash the Chaos is with us to take us through what he's making of things. Jay, last time you were saying that first a pullback before anything else. But a pullback of this magnitude, I mean, it's quite something, isn't it? What do you make of it, and what's your sense from here?
Yeah, thanks for having me on the show, Prashant. I still stick to the view that we got one more higher high for the Nifty above the August 19th high. But the risk for this view comes from the global markets because the S&P 500 is pointing to the possibility that it may have clocked a reversal from the August high and probably pulling back to the next level. But that is an alternate view, that possibility that the S&P holds about 3950 or close to that, and then goes higher. So that way, the view that we have for the Nifty, that the markets need one more higher high above the August 19th high for the Nifty, that would work out pretty okay. So we need to watch the global markets at this juncture. There are risks from the dollar index, Bitcoin, as well as Brent. So the next few sessions for the markets are going to be pretty critical.
All right, Jay, we are at around 17,700. When we were waking up on Monday morning, there were plenty of cries for, will we go ahead and test the 200 DMA? So on the upside, how much can we extend ourselves from around this 17,700? And the Nifty Bank will have to play a role. We are holding around 39,400. What's the resistance zone out here?
Yeah, completely bear this in mind. I'll probably, if the global markets turn around, I'll probably have to drop this view and then, and come around and get bearish. But at the moment, I'm thinking this market.
Okay, I think we have. Sorry, Jay, we're having some issue with your audio. So we'll do one thing. We'll just take a break and we'll come back and fix that audio line with Jay. The market's still holding firm, of course. So actually, let's do one thing. We try to repatch that line with Jay. In the meanwhile, we have another guest joining us. Srinivas Ravuri is the CIO of PGIM India Mutual Fund, is joining us now. Srinivas, good afternoon. Thanks a lot for joining us. What have you made of this stunning sort of move in the market? Globally, things are looking quite iffy, but in India, clearly, the impulse is to buy each and every dip.
Yeah, thanks for having me here, Anuj. It's a surprise move. In fact, as we get into the 1Q results, we were very skeptical and worried what will be the likely earnings for the corporate India. But as you know by now, that the overall results have been surprising on positive side. There's a big concern on what will happen to earnings given the kind of RM prices we've seen in the, let's say, February to April, May timeframe. But corporate India is doing extremely well, Anuj. I think that is what is supporting the move, in addition to the fact that FIs who've been sellers for quite some time have turned positives. I agree with you in terms of globally, things are not looking good. Quite a few challenges are ahead. So we need to be mindful of this rally.
No, so Srinivas, you're a bit cautious right now?
Yes, Prashant, most of the time we are cautious.
That's a good stance on the defense, and take a big swing once in a while, right?
You're fully invested, but within that, I think as we spend enough time in the market, I've spent almost 25 years. So I think being cautious when you're playing a risky asset makes sense.
Hi Srinivas, Nigel on this side. I'm looking at your portfolio. You have Timken in there. You had a couple of other, bearing stocks as well. And talking about a big swing, I think your fund went ahead and picked up Rolex rings, just a few days ago. So clearly that is the space where you all are quite bullish on. Maybe an indirect way of playing the industrial theme or the auto theme as well. So what's your view on that from here on? Give us a couple of pointers that we could work with. Your stance is clearly bullish on this space at least.
Sure, Nigel, you're right. We've been positive on auto and industrials, these two sectors for some time. Our thought process is we will see revival in manufacturing spending, capex, whether it is PL or even otherwise, because I think overall industry capacity utilizations are now closer to 75-76%. Though we don't know whether it'll start in 1 quarter or 2 quarters, but direction is, I think, corporate India has to spend on capex, and we are seeing early signs of that. The second is auto. I think both passenger vehicles and CVs are clearly up cycle, and I think that will continue for some time. How do we play these two themes? I think playing through ancillaries is a lot more, I would say, a risk-adjusted way better. You're not trying to bet which brand will do well, but you think the category will do well, and then the associates are likely to be a beneficiary, and that is what is reflected in our portfolio and our recent action as well.
Okay, fair enough. That's clearly a space that you're bullish on. What about some of these defense plays, Srinivas? Do you have any exposure here, because these stocks have also done well?
So we are there, Anuj, but not big time. We are there with the traditional names in there, the electronics manufacturer. But I think as a theme, whether it is the defense, whether it is the PLI, whether it is the infra, I think there is definitely more traction. Anuj, I think that's what we are also trying to play.
Just a little bit more on this domestic sort of manufacturing as a theme. Where is this? There was a lot of excitement in sectors like chemicals, for example, right? Building materials. I mean, you take things like MDF, laminates. We've seen excitement there. We've heard, not recently, but I'm just mentioning this entire China plus one kind of talk, right? Textiles, for example, there are issues in Bangladesh. Where exactly are you seeing some momentum building up and of course, I mean, earnings to follow when you talk about manufacturing here? Which areas?
So I think all of the areas that you mentioned, Prashant, textiles, of course, we've seen extreme volatility given the way cotton has moved. Chemicals have done well. There is a bit of breather given the way the raw materials have moved up. And also, I think from a stock market point of view, we've seen valuations, although I would say getting a little bit ahead of fundamentals, and then we're seeing a correction there. China plus one is clearly playing, Prashant. In fact, yesterday there was a management in our office. 60% of their growth is driven by customers shifting from China to India. So I think that trend is very much visible, and that will continue to play out in the coming months and years. In fact, on that, if you see the latest credit growth, Prashant, we've seen 15% growth. I mean, that itself is a heartening number versus the numbers that we used to see in the past. And if you see what has led to this growth, within that, you see actually industry has done much better this time. Retail has been doing well and continues to do well. And within industry also, what is heartening to note is the medium and small enterprises, their growth is almost 35%. So it's not led by one sector or one theme, but I would say I think there is a broad-based recovery in manufacturing and industry across. I think that is why people are getting excited. I'm saying even the FIs are saying that India is relatively safe haven, and all that is contributing to what we are seeing in markets right now.
Srinivas, that was a valid point, right? The banking credit number at around 14.5% odd. I went through the RBI site, and for all the quarters that were mentioned, close to 19-20 quarters, we never saw 14%. So even if you compare it with pre-COVID levels, we didn't see a number like that. And also what was encouraging was the CD ratio, right? I mean, at around 73% odd. Credit offtake is coming up. So that's pretty good news as well. But if the economy is going to be on the mend, then the cement space is going to be in focus. And Srinivas, I'm looking at your portfolio construct. Across portfolios, you'll have some of those smaller cap companies from the cement space, be it a Sagar Cement, then you're talking about Dalmia Bharat, and also some of the larger names in there. So how much of a role does this consolidation theme have to take place? Once you have a new player coming in there, the street is a buzz that something could take place. How much of a role will that play?
I think consolidation is there. We all can see what has happened. What is more important is, as a result of consolidation, will we see actually increased pricing pressure or a lower pricing pressure? I think now most of us believe that profitability will actually get better for the sector because the new entrant is among the best in logistics, and cement is all about logistics. So there is no need for being aggressive and trying to cut prices to gain share. And also, most of these entities are operating at a fairly decent utilization levels. You don't need to be aggressive to fill capacities, is the point that I'm making. So as a result of all this, and I think housing as a theme is extremely positive and remains so. I think we are seeing the number that we are seeing on the housing finance side, irrespective of this pre-sales, that number we see. So I think this theme is a long way to go. Housing as a percentage of GDP, we are still at about 10-11%. We've seen in other countries this number being closer to 20%. That may be a bit on a higher side, but even where we are, I think there is one sector one can be extremely positive on structural basis. Housing, I'm saying real estate companies may not be, but housing demand is a definite structural story for us, and cement is a play on that.
Srinivas, we leave it there today. Thanks a lot for joining us. Just a word on the market. There's a 3 p.m. move perhaps which sort of played out on the financial Nifty, 18,200. Now, I speak about 18,200 because that's where there's a lot of call open interest still outstanding. I mean, if you start to cross that, then I think there could be even bigger rush to cover. It's just that kind of a day, just when the market gets into this mood. I mean, when we started closing bell, the Nifty was up 2%, right? The Bank Nifty was up 2.5%. Now the Nifty is up 2.5%. The Bank Nifty is up over 3%. 1,200 point move on the Nifty and on the Bank Nifty, and on the Nifty, we are back at the trend line that, and the channel, if you see that trend line that, both Prashant and me have been highlighting, 17,750 almost on the Nifty. Jay Bala is back with us. Jay, apologies, we had that, connection sort of snapped. You're making this point that you see Nifty get back to August highs, but is that start of something big in sense that taking out the previous all-time highs as well, or do you think maybe that's getting a bit ahead of ourselves right now?
Yeah, thank you, Anuj. I had pointed out last week that the market's movement is likely to trap people on the both sides. It can give the record close to record highs or slightly exceeded, but this is not if the market were to exceed the 1,600. And whether you are on the long side or on the short side, you got to be very, very nimble about it. So
Jay, we can barely hear you. Some technical issue. What we'll do is we'll try and dial you up on the phone and put you on. Look at the move, 440 points, 17,755. So, when I was jokingly saying, 15 minutes back about that trend line, right? That is possible that...
Yeah, we're there.
We're there. We're absolutely there. I mean, we've crossed that actually, I think by about 5 or 6 points now. So it's just absolutely a crazy one-way move that we are seeing. 251 is this fresh leg of move started. 251, the index was at 17,690, and we've basically added 50, 60 points from that point on. So that's just what, in the last 10 minutes or so, Nigel.
Well, keeping with the cricketing theme that we were talking about yesterday morning when we woke up for markets, we were saying maybe in fact, if you get a gap down of around 340 to around 400 points odd after already a 400-point downtake, instead of a Yorker, it could turn into a full toss for the bulls. Because it'll be difficult for the bears to go and short at around 17,150, 17,200 odd. For the timing, at least, it appears it plays out in that way, because we're up 550 from the lows. But this is absolutely stellar. All through the day, we've been moving higher. And the final 60 minutes, if the bears thought they were in with a chance, at least as of now, they're getting wiped out.
I think you have to go to the Baikala Zoo to look for bears.
In cricketing,
Oh, there is
used to be one.
No, there is. I just saw two are there.
Since you spoke about the cricketing parlance, it's, yesterday was Rahul Dravid at work, right? I mean, just protected the wicket. And today he left it to Virender Sehwag to just go out and, just take it away. I think we got Jayabala on phone now to sort of carry forward this conversation. Just sorry, we're having some issue with the line. You're making this point on the Nifty.
Yeah, apologies. Probably the problem is at my end. I had said last week that the market could trap people on both sides, long and the short side, and the markets seem to be doing typically that. It has come very close to the 17K mark that I had said, but slightly higher, and that signifies short-term strength. But the problem for the Indian markets come from the global macros. The S&P seems to have put in a reversal, but it's not completely clear. But even if it hasn't, the next higher high for the Nifty that takes the market above the August 19th high, it will probably push somewhere close to the record highs, or it could be either slightly short of it or slightly above it. But this is not a start of a new trend. It's a very tricky and a treacherous market. If the markets were to exceed record highs, use that opportunity to liquidate. What I'm talking is something like as a medium-term view. Once the markets come close to the record highs, we're going to see possibly a waterfall decline that probably exceeds the 14,000 medium-term picture that I've had and takes the market somewhere close to 12,500 mark. This is a very tricky market and not an easy market to trade, so be on the edge.
Okay, so Jay sort of pointing to caution as well, even as we kind of look and celebrate the move that is on right now. Jay, how are some of the bigger sectors looking? How has your view changed? Just run us through. I mean, banks, for example, and what they're doing now. Autos has been another area which has performed. So just weigh in on these two and more.
Yeah, the banks are drawing its strength from State Bank of India, and State Bank of India has got a unfinished upward move, probably heading somewhere close to 570. As long as State Bank of India remains above 508, I think it's still got upside, and it'll drag the banking Nifty higher along with it. The bank Nifty faces resistance around 39,450 to 39,850. So when it comes to the auto, we are seeing a mild level of exhaustion in momentum. So although the price could go a little bit higher, but as long as the auto index stays about 12,600, this outperformance that started in March, that's likely to continue. But once 12,600 breaks, you want to be start thinking of liquidating your long positions in the auto sector. But until that holds up, it's all good for the auto sector.
I just spoke about financial Nifty, Nigel, 18,200 when it was crossing that. What if it crosses that and starts to trade above that? We're at 18,264. I tell you why it is important. If you look at the 18,200 call for today, by the way, the weekly options expiry on financial Nifty happens on Tuesdays, and it started to generate some really big volumes. So at 3 p.m., the 18,200 call was trading at 2 rupees. It's gone up to 60 rupees. It's in a matter of 8 minutes. It's from 2 rupees, it's gone up to 60 rupees. And some of the other calls of financial Nifty today are up almost, 2,000 to 8,000%. That's been the kind of move that you've seen in today's trade. And the point I made, I think 3 or 4 days back, September and October are 2 months in which, the market can make mincemeat of option sellers, because of these kind of days. You could have absolutely no risk management that will protect you against this kind of move when it happens, with the gap up to begin with, and then the market keeps moving higher and higher and higher, and towards the end, I mean, I think from 230 onwards, the market would have easily, added another 1%, more than that maybe on the index itself.
Absolutely. All right. So that's about the index then. I think we'll thank Jay, I think, for joining in. In fact, giving us his quick take on the indices. It's looking good for the time being. We slipped to a short break, but on the other side, Nimesh is waiting with us. He'll get us a quick check into dealing rooms. We're also
possibly one of the biggest days of the year, and honestly speaking, with the kind of gap down that you had yesterday morning, if you would have told that the Nifty would be at 17,765 in a matter of one day, and nobody would have believed that. But that's what the markets do, right? From yesterday's low, which was well below 17,200, to where we are right now, once again, almost getting to 17,800. Just stunning. Nimesh is joining us for D Street Chatter. Nimesh, is this driven by FI buying? I mean, what's happened today?
Hi, Nijir. So a couple of factors I believe has worked in India's favor. One, of course, the lack of selling intensity from the larger FIs, and the fact that there is a lot of left out feeling. In fact, I was with some large investors, and even the largest investors, the HNIs were having a bit of a left out feeling that they didn't participate in a very large way in the last in a few weeks of move. So there is clearly that factor which is playing out, and now people want to just chase and buy whatever they can. As I said, there is lack of intensity from the larger FIs. So that's been reported in the numbers as well. Even yesterday we saw a very small FI sell number despite a large sell-off in the Indian market. So that shows that there is lack of selling intensity from the larger FIs, and of course the DIs continue to participate. I guess today's move is across the board. Of course, it's led by financials, because there I believe there is a bit of short covering as well. But look at the broader markets. The mid cap is up 2%, the small cap is up 3%, and across the board there is good amount of buying interest. And largely today's move is in the domestic facing companies. So cement is doing good, real estate stocks are doing good, financials as a basket has done really well in today's trade. So that's where the big interest seems to be. The domestic cyclicals and the domestic facing companies is where a lot of interest seems to be. But as I said, two reasons. One, a lack of selling intensity, and the fact that many have not participated in this up move is leading to a bit of a panic buying as well from the larger HNIs in the broader markets.
Nigel, Nimesh, are we going to see a large chunky flow number, FI positive number today?
It doesn't look like, Prashant, and the reason for that is, as I said in the morning as well, there is an MSCI rebalancing wherein the India weight goes down by marginal basis points, which will lead to a sell flow of close to $300 billion. So net of that, you may not see a very large sell figure from the larger FIs. What I'm saying is there is lack of large selling in the open market outside of the MSCI flow. So that's helping the market. Not much selling coming in from the larger institutions, and the HNIs have become active now, is leading to a big rush towards 17,800 on the Nifty.
And what about individual stocks, Nimesh?
Well, there are a lot of names to start with. I'll start with the large cap stock, which is Tata Motors. That's buzzing in trade, largely on back of strong buy flow. So the delivery volumes are going to be quite high, and I understand a couple of long only funds seems to be quite active in Tata Motors today. So that's the first one. The second stock is Surya Roshni, been buzzing off late. This week the stock is up over 25%. And there is goodish amount of buying from the HNI desk as well. The big buzz is that maybe you're going to hear a big corporate development in this company very soon. So that's something to do with Surya Roshni. That's the second stock. The third stock is Spandana Spurti. Again, in today's trade, it's up 5%, buzzing in trade. The big buzz is that there's going to be a large block deal very soon, and potentially a clean out trade from the erstwhile promoter, and hence a bit of action in this particular stocks. That's the third one. And the last stock is HBL Power System. Again, buzzing in trade has been buzzing off late. It's been consolidating as well. Even here, the buzz is that there's going to be a large block deal. A venture capitalist who owns almost 10% stake is likely to be a potential seller. And once that's cleaned out, you'll see a big move in that stock as well. And hence, even HBL Power System has been buzzing in trade today.
Okay, all right. Thanks a lot for that, Nimesh. So we're holding comfortably around that 17,750. Mitesh is back with us. Mitesh, dream run for the Bulls. What do you do from here, and what are your final calls?
Yeah, a very strong run. I would take a BTST on Godrej Consumer. That's a BTST with a stop at about 916 for targets of 940. And the other one which I like is Bosch Limited. That's a BTST with a stop at about 17,400 for targets of 1770.
Okay, Mitesh, thanks a lot for those calls. Kunj Bansal is joining us now, the last leg of the show. Well, today the mid-cap index has actually underperformed despite a 2% rally and 3:1 advance decline. I mean, that's just been the power of the large cap move today. On the index, we are up 2.5%. On the bank nifty, up 3.2%. Kunj, hi, good afternoon. What's happening in our market? Because it looks like we're sort of just ignoring what's happening globally and just want to chart out sort of our own sort of strategy, and may not be the worst thing. If we sort of stop reacting on a one-to-one basis to Dow Jones. But your thoughts?
Yeah, so thankfully we have a holiday tomorrow to take some balancing coupled with the global developments as well as domestic developments. We of course will have our GDP number released tomorrow. So I don't know, because of the looking at the rise, although it's always difficult to understand the market reason, but I'm just trying to fathom that could we see a positive surprise in the GDP number tomorrow? And could that be one of the reasons we are seeing this kind of buying or short covering in the market resulting into such a sharp rise? On the other hand, if I look at it, suddenly the oil price has started going up, and which is worrisome, which right now market is ignoring. So it clearly means that market is getting more positive triggers with high weightages compared to this negative move of the oil price going up. All other commodities thankfully continue to remain down. So that's a positive sign. But looks like, yes, the way market is looking at it, market probably is looking at good festival demand coming in the September and December quarter. Raw material prices, commodity prices continuing to remain low, and as a result, the market is probably looking at margins of the company coming in higher. The selling that continued for 8-9 months, the left out feeling is probably resulting in FIIs continuing to buy. Domestic investors had also missed out on the first part of the rally, which suddenly started from June to July, and have probably come back to participate. So very difficult to fathom, but one can only try and think around what's going on.
Kunj, some of these banking names, particularly the tier 2 banks, they have come back in style. But as we are talking about the markets moving to the high point of the day, a couple of these banking names are moving to the day's low. Case in point, AU Small Finance Bank. Do you have a view on that one? I remember listing it was touted as the next big thing. And still some part of the street believes that this is going to be a big compounder. Are you in that camp?
So the numbers have been good from the bank. There's no doubt about it, leaving the few quarters of Corona, which whole industry got affected, and so did the bank also. Of course, it got much less affected compared to the other banks. But valuation is one thing which continues to, it's a call of the confidence on valuation which one has to take. So although as an investment style and as a general belief, I'm quite happy buying high quality growth companies at slightly expensive valuation, but I don't know, for no specific reason at the current valuation for this bank, it doesn't attract me so much, because I'm getting other banks maybe not as high growing as this bank, but reasonably good growing at much lesser valuation comfort. Let's say ICICI Bank, despite so much rise. Let's say IDFC First Bank, which gave excellent result in the June quarter, and after so many quarters of following up and committing and not being able to deliver and things like that, finally they delivered, and the share price has rewarded them sharply. In fact, the share price of IDFC Bank, IDFC First Bank, since the result declaration has moved up 15%, maybe 20% also, and it still carries the valuation gap. So this valuation gap along with the other financials mixed, offering me better opportunity in other banks, is what makes me not comfortable with the AU Bank, but financial wise there's no issue.
Do you like any of the capital market participants, with so much activity, be it brokers, names like CDSL, CAMS, Exchange, there's one BSE, any thoughts here?
So typically I would classify them as annuity based stocks, and somehow if we look at the previous rally also post corona which happened, and 3, 4, 5 years period before that, and after that the correction, these stocks have taken part in the rally in the last leg of the rally, when everything else in the market gets bought. The institutional and retail shareholding almost comes to the level of brim. No further money flows in. Valuations as a result become expensive. Then that next incremental money tries to look for such kind of stocks. I think the same is something like that is likely to happen here, because we have seen, let's say for instance, CAMS. Now that's a stock which which continues to underperform. Even other AMCs also. So these will be good dividend yield plays. Hopefully their payout ratios, the managements keep giving good dividend to the shareholders. So they may not be dividend yield wise, they may not be high, but dividend payout ratio, they'll be high. In terms of their share prices to rise, probably it will take really extreme end of the market bull run to come in.
Okay, Kunj, stay on. We have more questions for you. For now, we'll take a break with the news that the market has had a stunning session, and we are closing at the highest point of the day, not even budging a few points. So just look at that on the Nifty. 17,774 is what we have on the index. We'll take a break, and of course, we'll come back and recap the market rates for the day.
The occasion of ace investor and self-made billionaire Warren Buffett's 92nd birthday, we bring you a comprehensive picture of his net worth and where it stands. Prashant has gone over to the big ball to tell us more about that. Prashant?
Well, thanks very much for that. So yes, I mean, Warren Buffett, the best known investor of all time probably, has turned 92. So from all of us here at CNBC-TV18, wishing Mr. Buffett a very happy birthday. It's very difficult to do justice in a short piece like this in terms of his what he's taught everyone. I think the biggest takeaway from Mr. Buffett is how much he's taught the world in terms of what investing is all about. But what we can do here in the limited time we have is just to run through stats, right? As he said, I like to, I like to make money, and I like to pile it all up and give it away at some point in the future, which of course he's been doing as well. The latest net worth for Mr. Buffett now stands at $100 billion plus. That is quite something. How does this rank? Globally, he's ranked at number 6. Within his industry, he's ranked number 1. I mean, to find yourself consistently over decades in the top richest people in the world, doing nothing but investing, being an investor, not an industrialist running, a plethora of companies, that by itself is quite remarkable. What does all of that wealth, that $100 billion count, what does that weight when you look at the top 20 billionaires, top 100 billionaires, top 200, top 500? I mean, his wealth is about 5% of the top 20, what the top 20 billionaires are together worth. Similarly, 2.5%, 1.9% and 1.4%. Just to tell you, the numbers are really large. This is some interesting data which our colleague Yusuf pulled up. This is all, of course, Bloomberg data. His net worth measured in gold, in sort of crude. Of course, I mean, crude is a volatile commodity, volatile subject. And of course, as a percentage of US GDP, as a percentage of India GDP as well. If Buffett were a company himself, he would be ranked number 77th on the S&P 500. So we're talking about some really large numbers here. And of course, no mention of Warren Buffett can be complete without mention of his partner, Charlie Munger, who's, by the way, 98. And of course, Mr. Buffett turned 92 today. Just completely incredible what both of these have done. But as I said, this is not a summary of what they are really all about, which of course is what they've taught the world of investing over decades and decades and decades. And all of us have been wiser as, because of what they've done. So just some numbers to commemorate the 92nd birthday of Mr. Buffett. Back to you.
Absolutely, Prashant. To really take your hat off to both these, and of course Buffett himself, 92 and 98. And the best thing is, you ask them a question about, what do they feel about the market? They say, we only think long term. So, even at 98 or 92, you're just thinking about long term. That's how wealth is made. Yes, of course, we talk about the near term moves, but the big wealth is made in the long run. Unless, of course, you get the weekly options right, of course. But like today, when the market made this kind of a move. Okay, let's quickly, run through the closing rates. Stunning move for the market. 2.5% higher on the Nifty, 3.5% higher on the Bank Nifty, 2% higher on the mid-cap index. Just roaring. In terms of individual names, well, what can you say? Today was a day when almost everything was in the green. In fact, not a single Nifty stock in the red. Financials did well, Bajaj Finance, Finserv and IndusInd Bank, but the real move came from the heavyweights, ICICI, SBI, the HDFC Twins and Kotak Mahindra Bank. Tata Group stocks did well today, so Titan, Tata Motors, Tata Steel were all higher. Maruti did well, Axis, TCS. I'm only restricting myself to stocks which were up at least 2.5%. It just tells you the way the market moved. Nigel, the broader market did well.
Well, what a party there was at the broader market. So if you look at the headline index, you'll see, well, it was a relative underperformer because the mid-cap index was up 2%, while the Nifty was up 2.5%. But you'd be missing out actually because there were plenty of big gainers out there. Let's pull up a few of them. 5 Paisa Capital, the stock was up 20%. Igarashi Motors, the stock was up 20% in trade today. Tata Tele, the stock was up close to around 20% in today's trading session. And a couple of other notable movers. Kaya was up 11% as well. There's a while since I saw that one move so much. BLS International as well was spiking up in trade. You had Anant Raj that was up close to around 12%. AGI Greenpack was up and about in today's trading session. So plenty of winners really from the broader markets. S Chand as well, up roughly around 10%. So to sum things up, what a stellar close it was to the trading session. The Nifty up close to around 440 points odd. The Sensex up 1,500 points. The Nifty Bank in there with a gain of close to around 1,200 points. The mid-cap index as well moved pretty much in step. The number of stocks advancing way more than the number of stocks declining in the ratio of close to around 3:1. So all those fears about Monday's low, well, we didn't just recover all of Monday's losses. We have ended above Friday's close. So that's telling you the kind of mood in the market. Well, we'll wrap up on this edition of Closing Bell, but you don't go anywhere. Our special show, Money, Money, Money,